Hello, this is Miles Tello bringing you the JD Power Financial Services Intelligence Update for May 2025. This month, I'm joined by Paul McAdam to discuss our latest findings from the JD Power U.S. Direct Banking Satisfaction Study. Welcome back, Paul.
Thank you, Miles. Pleasure to be here.
Great. Let's get right into it. What stands out most about the results this year?
I think one thing that really jumped out is with checking relationships. We saw large satisfaction increases with customers liking the idea that the direct banking checking account is helping them to grow their money. And as we all know, that's not really due to interest rates on the checking side of things. When we peeled back the data, what we saw is really large increases this year in customers indicating that they're receiving access to credit from their direct bank checking provider, that these providers are helping them to better understand their creditworthiness, and that customers more frequently this year are using budgeting and expense management tools. So it really looks like it's other elements of the value proposition, particularly relating to credit, that is boosting this overall sense that the providers are helping customers to grow their money.
That is interesting on the checking side. You'd think there's less opportunity to help customers feel great about the experience, but it sounds like the direct banks are doing a good job with that. Are they doing the same on the savings side?
Not on the savings side. So on the savings side, we do have deposit interest rates that are somewhat lower than last year when we ran this study, generally in the 3.5 to 4 range, where last year 4 to 4.5. So we did see a decline in savings satisfaction, with the decline in the deposit interest rates being a big driver. The other thing we saw, though, on the savings side is metrics associated with the ease of using the website. Online banking, the ease of logging in, the overall ease of navigation within the website. So looks like some brands are, maybe not having the website completely up to date as much as it could be.
Interesting. Can you talk a little bit about the typical direct bank customer, the age and income and that sort of thing? What does a direct bank customer look like compared to a traditional retail bank customer?
So remarkably, they do look pretty similar. When we go and we look at customers of neobanks like a Chime or a Credit Karma, those types of players, then it's quite a different profile. Younger, tending to be more moderate income types of consumers who are highly fee sensitive. But on the banking side, we see that the customer profile is overall pretty similar. But we do see, though, that on the checking side of relationships, these direct bank customers do tend to be a little younger. On the savings side, they do tend to be a little older, and they are holding larger deposit balances.
So how does that satisfaction that you were talking about before with direct banks, maybe on the checking side first and then the savings side, differ by those age groups, right? If they demographically look the same as a traditional retail bank customer, does their satisfaction track the same as well? Or what are we seeing on satisfaction by age?
What we're seeing on satisfaction by age is that this year, younger customers' satisfaction is rising, whereas among older customers, Gen X, Boomer, generations, satisfaction is declining. And it's really the deposit interest rate that has a lot to do with that. Along with the point I raised earlier, because it is younger customers more often than older who are looking for credit, who are really interested in finding out ways to boost their credit score. So we are seeing that dynamic on the checking side where that customer base is younger and satisfaction is rising because they're utilizing some of these credit-oriented services more.
Got it. So the direct banks are doing a better job of servicing these younger customers. Satisfaction is rising. What does that mean for traditional retail banking, in your opinion?
Yeah, it means the competition is going to be tougher than ever. If you just look at the top two ranked banks on checking, we have Charles Schwab and American Express. Well, okay, talk about a couple powerhouse brands. So, and we see that these customers who use these services on the checking side are using an average of, they own an average of three accounts with these two brands, with Schwab and American Express. So, the incumbents absolutely are becoming very strong, dominant players in this online direct banking marketplace, and that just spells more competition for traditional banks.
Got it. Well, Paul, thank you. This is very helpful. Is there anything that I didn't ask that you wish I did?
I think one point when in this marketplace, the products are more or less at parity: online checking, online savings. But when we look at the rank charts and the brands that are at the bottom of the rank charts in checking and savings, it really does come down to the quality of customer service. These customers don't have problems often, but when they do, the banks that are at the bottom half of the rank chart, their customers are saying that the phone service isn't quite as good, resolving problems isn't as easier as it could be, and it's just overall not as easy to get help from the bank in terms of the ability to reach customer service. So that those are kind of warning signs for everybody in this marketplace that yes, products matter. Products will always be important here, but the overall satisfaction picture is really driven by the quality of customer service that the brands are providing.
It's always insightful to hear from you, Paul.
Mhm.
Really appreciate you joining us today. Thanks for doing this.
Okay, thank you.
Yeah. So the JD Power U.S. Direct Banking Satisfaction Study is available now. If you'd like, you can learn more about it in the press release link that's below. I will be back in June to discuss findings from our financial health and advice satisfaction study. We will see you then.